What's up everyone, it's Scotty with MoneyVest. So in this video, wanted to go over the entire market, give you guys some updates, some breaking news related to Nvidia and Amazon, and also touch over on recession expectations and rate hikes and rate cuts and what the market is pricing in from a federal funds futures standpoint. As always, if you enjoy this video and find it helpful, make sure that you drop a like and subscribe to the channel. I would really appreciate that. And of course, link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the members-only private videos, access to all the trade alerts, trade ideas, and the early access to the MoneyVest.com platform that's going to be launched for the beta on March 31st. So all members, all existing members on our Patreon will have access to the beta launch on March 31st, which is going to be the MoneyVest Pro platform that includes your entire fundamental analysis suite as well as the macro dashboard, and includes a lot of other features, including portfolio tracking and analysis and rebalancing as well. So this right here is going to be the Fed Funds Futures expectations and how the market is now aligned with what the Federal Reserve has been telling us for such a long time. 4 rate cuts is what the market's pricing in now, with 5.25% to 5.5% coming down to 4.25% to 4.5%. So that's about 100 basis points worth of cuts, or 25 basis points is going to be each cut here. Each hike is also 25 basis points, or each cut is also 25 basis points. So we're expecting 4 cuts beginning in June of 2024, with the first cut coming in, staying there for another month, and then September with the next cut, November, and then of course in January of 2025. But the bottom line is the market's only pricing in 3 rate cuts in 2024. That's aligned with the Federal Reserve. That's the biggest change and that we have seen in all of 2024, and probably the biggest alignment with the Federal Reserve expectations is what we have also witnessed, because the markets now is only pricing in 3 rate cuts this year in 2024, exactly the amount of rate cuts the market was what the Federal Reserve, the FOMC, has been telling us for quite some time. Now, U.S. economic outlook, why federal interest rate hikes are also back on the table. So Larry Summers pretty much mentioned that they addressed the possibility the next move could be a hike, assigning a 15% probability for that as well, which would absolutely crush expectations from the market, and obviously will not be good if we actually witnessed a hike in the federal funds rate instead of a cut moving forward, right? So the next meeting is going to be taking place on March 20th. That's when the next meeting is going to take place. And again, the probability very much is for a pause, for keeping interest rates where they are. And he says, and I quote, "It's always a mistake to overinterpret 1 month's numbers. And that's especially true in January, where calculating seasonality is difficult. But I think we have to recognize the possibility of a mini paradigm shift. Markets too have started to reflect this shift. Traders have effectively removed all bets for March cut, and swaps data cited by Bloomberg shows expectations for moves in May and June are also pairing. And CME's FedWatch tool shows the odds of a quarter-point cut in March hover at 6.5%, down from almost 50% a month ago. And in May, markets forecast a 64% chance for no adjustment, up from 15% a month ago. So as I mentioned earlier, we were expecting as many as 6 to 7 rate cuts, and the markets have really repriced all that back out, and we're now only expecting 3 rate cuts in 2024. Overall, 4 rate cuts going into March of 2025. So in the next 1 year, only 4 rate cuts is what the market is pricing in. Now, inflation is still stickier, so stickier than expected inflation. Prices often fluctuate to start a year in what's known as a January effect, which may in part explain the recent inflation surprise, which obviously came in a little bit hotter than what the expectations were. And one component of inflation that seems particularly sticky is owner's equivalent rent. So as we have talked about, shelter prices continue to be very, very sticky here, a measure of homeowners' estimates for what their residence would be worth as a rental unit. And as you can see, that this right here is owner's equivalent rent and the rent of primary residences, which is accelerating back higher a little bit. And the January OER rent gap was the largest since 1995 as well, which obviously does affect core PCE, core inflation to begin with, because core inflation is really what the Federal Reserve is looking for. That's really the one that the Federal Reserve is focusing very much on. Nvidia makes Wall Street history as stock surges and adds $277 billion in market cap. So Nvidia here making history, jumping over 16% yesterday, adding the most market cap in one single day. I mean, there are companies that are not even worth $277 billion, and this is a company that just added all that market cap in one single day, the biggest single stock market gain in history. And Meta obviously had that similar feat on February 2nd when it jumped over $204 billion and added that much to its valuation, jumping over $1 trillion. But NVIDIA here just absolutely going crazy. I think it's still up over 4% here on the day today. So if you come over to NVIDIA, we are up over 3%, trading well over $811, and the market cap briefly touching almost $2 trillion for the entire company. That's absolutely insane. And the Amazon company is now finally joining the Dow Jones Industrial Average as well. And the online retail giant will succeed Walgreens in the storied stock index. So now we have, of course, Apple, Microsoft, and Amazon all part of the Dow Jones Industrial Average. It's kind of becoming a little bit more tech-weighted sector, tech-weighted index, so to speak. But the online retail powerhouse will be added to the venerable Dow Jones Industrial Average at the start of the trading on Monday. And S&P Dow Jones Indices, which manages the 30-stock benchmark, said the changes were prompted by Walmart's 3-for-1 stock split, which is also effective next week, and to reflect the evolving nature of the U.S. economy. Unlike the S&P 500 and the NASDAQ composite, the blue chip is weighted by share price, so price weighted instead of market cap, and Walmart's split will reduce its weighting and that of the consumer staples sector as well. So they wanted to rebalance a little bit by adding Amazon to the blue chip index, officially joining on Monday. So that's also going to be a huge news. And Amazon on this news here right now is up 14 basis points. Of course, it was up a little bit over 3.5% yesterday as well. So the bottom line, I mean, markets here continue to plug along here to new all-time highs. I mean, S&P 500 is trading at well over 5,100 for the first time ever in history, up over 40 basis points, 5,117. The NASDAQ here also getting up to that new all-time high, almost 16,000, crossing 16,000 for the first time in a very, very long time here. So that's another very strong momentum coming in for a lot of these individual indices here. Volatility continues to be low at 14. So what I'm personally doing is keeping it super simple, still invested, still long, and enjoying this market rally and taking advantage of the profitability that we're getting. I did add a little bit of IWM this morning. So added a little bit of small caps here, and I do believe that I think this has more potential. Targets back up to 233. We do need to see a breakout above this resistance of 205 before we can see that momentum back up to 230 and 235 for volatility, for IWM, for small caps as well. But the bottom line is enjoying these rallies. I know for a fact that this is not going to last forever. I think there's going to be a time when we do start to see some pullbacks and some corrections, which is going to be very normal. But that's also the time when we can start dollar cost averaging into the market and start deploying some cash back into the market and look at some deals that are going to potentially be undervalued. Tesla, Enphase, and PayPal are 3 stocks that are still underperforming and not really doing well. So Tesla here still underperforming. Year to date, the stock's down a little bit over 22%. So we've seen significant underperformance on Tesla. PayPal is no different, also underperforming right now. Year to date, the stock is down over almost 4%. And Enphase also not really doing anything at the moment. It has seen somewhat back and forth momentum, but year to date, the stock is down 6.6%. So these are 3 companies. These are 3 stocks. If they start ripping higher, I'm going to have a fantastic year. But that, of course, depends on third and fourth quarter and how we close out the entire year for these 3 stocks. But NVIDIA already is up over 100%. On a year-to-date basis, I believe. 64%. 64% is how much it's up on a year-to-date basis, and not to mention SMCI has also seen just an insane rally up 215% on a year-to-date basis, and AMD also just ripping higher and higher. Year-to-date up over 23-24% already so far in 2024. So hope you all enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below. The only things that I'm really doing right now is sitting back, enjoying all the profitability, enjoying all the gains here with this market momentum and this higher rallies that we're seeing. At the same time, selling some calls, hedging, de-risking, raising some cash to take advantage of that potential pullback and correction. And we'll start looking at dollar cost averaging into some deals back into the market once again. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. As always, happy investing, and I'll see you all in the next video.